Hello, everybody. My name is Gino Barbaro. I am one of the hosts of the 100-Year Real Estate Investor Show. We are the show dedicated to personal financial engineering. And with me today are Ryan and Mina Rickey. As co-owners, they split their time between businesses, with Ryan overseeing Ricky's Jerky, getting into that a little bit, and Mina focusing on her land acquisition business, Land Realty Pro. In 2021, they purchased their first whole life policy. They loved all the benefits of whole life so much that they purchased their second policy in 2022. Welcome to the show, Mina and Ryan.
Hi, Gino. Thank you for having us. We're excited.
As Ryan said, this is Ryan's first recording, so we'll see how it goes with Ryan. Mina is a pro. She's an amazing Toastmasters. We'll see how it goes, but give us a journey, a little bit of background of your business acumen, how you have Ricky's Jerky, and how did you get into whole life from that?
Very first time I heard about whole life, I was young, and it was a little over my head. My brain hadn't quite developed. But over the last 20 years, when we were turned on to it at some of the events, recount, and then Mina and I were looking at each other going, hey, that doesn't sound too bad. What do you think? Let's get some more information.
Ryan had started a beef jerky business in 2014. We met in 2015 at the Texas State Fair, and we were married by 2016. We came together as two forces from different sides of the world, and we grew the business together. We were very dedicated. Sometimes we were working 10, 12 hours a day, both of us, growing the business. There was a point where the business started to give us some fruits, and we started to have cash with us. So by 2021, we started to think about kind of staying away from traveling so much and settling down. And we also joined Jake and Gino. During the boot camps at Jake and Gino, we heard about the whole life. And yes, we thought it was a great idea. But we're still a little bit hesitant. At the end of the Christmas run, we had some cash. We decided to start one of the policies on me, I was younger and healthy, so it wasn't going to be too expensive, and just start going on that direction to see what happens. Mm-hmm. At the same time, I remember we started to invest on some short-term rentals with some of the guys from Make It Happen. And we also started to invest in crypto. Well, guess what, the investment with the short-term rental didn't go so well. We didn't do our due diligence. The crypto completely, just flat out, we lost that money. And the only thing that remained was the 100-year life insurance. And that was the big lesson for us. It's like, oh my God, the less exciting of all the products is the only one that remains.
So let me ask you, you called it, before we got on, you called it the stupidity insurance. Can you expand upon that a little bit? Because I've never heard of that being called before, but I guess I'd like to hear your thoughts, and then I will give you my definition of when I hear the stupidity insurance, what that means to me.
Absolutely. Well, it was the only thing that wasn't shiny. It's easy to fall into the hype. It's easy to do what everybody else is doing. It's just easy. You get carried away, and you're only human, and you're only this strong, right? So if you have all your friends saying, this is going to go, extend, and this is going to increase your money, and everybody's getting excited, you just can't help it but to get excited to go with everybody. So by having this whole life on the side, it was just that insurance. At the end of the day, this was something that if we lost everything, we still will have that to fall back into. And that's why I call it the stupidity insurance.
I love that. If you give me 1 minute to expand on that, because there's so many things that come to my mind. I think the first thing is, when you talk about that, you're putting money aside. And to me, especially in the first couple of years, it feels like an expense. And what it really is it's a forced savings. And you both have a business. If you have liquidity issues, you can pull that money. Well, what happens if you have the money in crypto and all of a sudden you need it, or you retire and that money goes to zero? Well, you're in a credit crunch. And I think what's happened over the last 5 years, you both have seen it in real estate. All of this exuberance that we've seen in the market, and it's driven by the Fed with 0% interest rates. It's taught us that all of what me and Jake like to call our baby money soldiers, all the money that we make, they all have to be at risk. We all have to chase yield with every single dollar that we have. And that is the farthest thing from the truth. It's not sexy. And I've interviewed dozens of entrepreneurs who are 8-figure, net worth and beyond. They all have whole life. It's just one little component. It's their stupidity insurance that if something goes bad with one of the risky, deals, they still have the money to fall back on. And for me, it's the same thing. If I have a property and I need money to close another deal, but there's no liquidity, I have money in my whole life policy that I can actually go out. When I had the restaurant, times were tough. I still had those policies where I could pull the money out if I had to make payroll or if something happened in the kitchen, I couldn't fix something. It was that I'm going to call it. That's my term now, Mina. My stupidity insurance, because God knows I've done a lot of stupid things, and that will help you out from balancing the stupid things and the good things, and you still have it. So what made you decide to get the next policy? Did you just see everything else around you falling apart and like, hey, there's money here that when an opportunity does come, I can go out and tap that one?
Yeah, you're right, Gino. When we were kind of reviewing our 2022, we were thinking, okay, what went well this year? And maybe we should focus more on that. And the fact that we do have a cash-based business, and I realize that's not everybody, but for folks that are self-employed, that do live during the good and the bad times, it's nice to have that cushion to fall back on. And I manage the finances, we co-manage, but I always have my head in the books. I know where the money's at. And Mina made a good call getting it in at the end of 2021. So we did it again at the end of 2022, and we added just a little bit more. So even in 20 years from now, if we can still maintain the lifestyle we live now in 20 years from now, that's the idea behind it. And tighten the belt a little bit, and then when the good months are back, we'll still have that extra cushion for the next deal.
Well, and also if an opportunity comes up, we're ready. We don't have to wait until that show ends to be able to meet the deadline. We are ready to go in. And the other thing is, it also teaches patience, which we just don't seem to have when it comes to money, because we work so hard. So we like to just go hard on our money as well. So it's a good way to just make us just be patient and just educate, train ourselves to live within our means and to put money away. Robert Kiyosaki says that you can train a monkey to save, but this is not saving. This is actually a strategy, because what we were also talking about is that it helps us with our yearly tax, and it helps us because it's an insurance.
And I love that. It's really what we call the dual asset strategy, because for you, as you have your business and you're buying land, or if you need to buy more inventory, you can pull it out. You have that one asset already. If you're pulling the money out and borrowing it, you're creating another asset. You're buying another asset or investing in another asset. And when that asset starts to pay, you can just pay back the loan, or you can keep the loan open, whatever you want to do. It gives you the flexibility, and all of a sudden you have two assets. I mean, can you imagine the power of that? And we're not taught that in school. That's the problem, because it's so hard. You tell it to somebody, you're like, well, I've got to borrow my own money. Well, no, actually, you're just taking a loan out of your own money, and your money is collateralized in the loan, and you're going out there and you're able to. It's the opportunity value of the money itself, and that's important. But Mina, you touched on something really important. You want to go ahead? You want to say something?
Yeah, on that point, Gino, you're talking. Let's just give a real example. In the land acquisition, when you're going to borrow money for just a piece of dirt, the banks, the credit unions, they just don't want to loan money on that. It's just dirt. However, if I can borrow my own money to hold that dirt, I can then get all the permits for developing that piece of dirt. And then the value of that piece just goes really 10 times just by adding all the permits. Well, guess what? Now I have the money to just go ahead and do all of that myself without worrying who's going to loan me on dirt. And I can actually just keep going on my business. It's amazing.
And at her close.
I love that. Let me follow up with that, Mina, because we talk about multifamily a lot and land. What about if you're a single family home builder or a fix and flipper, and you're buying a home and you're borrowing at 12% and 3 points? It's so exorbitant. But guess what? If you have a whole life policy, you're protecting yourself for your death, right? You have that death insurance, that death benefit there, but you also have the ability of the money to borrow at what are the rates? 4%, and you have that money. It's still earning uninterrupted. You pull the money out, you fix it. You're stable. You could pay yourself back whenever you want. There's no capital calls. There's no rush in the deal. When you're done, you make the profit. You could put it right back into the policy. So you made an awesome point. I never thought about that because you're actually adding a lot of value onto that piece of that land. So if you buy it for $10,000, you borrow it. All of a sudden, let's say you double it, it goes to $20,000. You just made a $10,000 profit. And you're using your own money, and all of a sudden you have two assets that are working in conjunction with each other. So that's a great point. Ryan, did you want to mention anything?
Right, I was basically saying something similar or thinking something similar. Going through the bank process, being self-employed, you can have excellent credit, you can have money, but the way we like to pay our taxes, we take advantage of the system and use our opportunities that are there, so we're not making money just to pay taxes at the end of the year. So, we take our adjudicated write-off. And when you go to a bank, they say, well, you need to have a little more on your adjusted gross income, sir. So that's the other reason too. We thought, okay, well, let's park some money in whole life, let it build up. And then when the time's right, we'll just take it out and put it in the asset, go to the closing, put the money right back in with the cashier's check from closing.
And I'm going to give the CPA or the accountant's definition of what Ryan's talking about. He's talking about tax avoidance. You're avoiding taxes. You have a fiduciary responsibility as a taxpayer to pay the least amount of taxes, not tax evasion, which is illegal. Right. He's not evading taxes. He's avoiding taxes, and he's taking the utmost deductions. And when your adjusted gross income goes at a certain level and you have cost segregation, these other benefits, bankers will look at you cross-eyed going, but you made negative $50,000 this year. Well, no, really, if you could read the tax return, I made a lot more. But it's one way of saying, I don't have to deal with the banking system. I'm out of the banking system. And if, by the way, you have money in a bank and a bank closes, are you FDIC insured? You are out of the system. You're in a product that's really strong and you don't have to worry about it. So tax avoidance is one thing. This is what we're talking about, not tax evasion. Now, Mina, you touched on something really important, the patience. And it is the 100-year real estate investor. I wasn't even thinking of asking this question, but how has your mind shifted over the last 5 years? And Ryan, you can answer this question as well for the business. Going from the transaction, short-term mindset, to how have you developed the 100-year mindset, that long-term mindset, and what has it done for your business and even for your relationships?
I want to say that it's a whole shift in our mindsets. We have gone through from just thinking about the next month, the next vacation, the next roadblock, to what really designing what is it that will make us enjoy our little time we have on this earth in a deeper way, in a more fulfilled way, and then designing through that, and then editing the days as we go, and really getting and opening up to each other and say what's working and what is not working, and really just, it's almost like being conscious is one word that comes to mind. Being conscious of our days, being conscious of our hours, our assets, what comes through us. And the other one that I want to say is also preparing ourselves to be free from these systems in a way that we just don't think about. For instance, if we are our own bank, that's a lot of freedom. If we don't have to depend on the interest rate that the government is setting, that's a lot of freedom. I mean, it's just in so many ways that freedom, that responsibility just absolutely changes the whole paradigm. It's a paradigm shift.
I like that.
Yeah, old Yellen was out there today saying that, hey, we're going to tighten up the guidelines. That way, Fed shouldn't have to raise the rates one more time. To not even have to care about that, that's great freedom. It just takes a lot of stress and relieves some burdens.
Mm-hmm. And Ryan, let me ask you, how have you been able to employ that 100-year mindset? Let's talk about that a little bit for the listeners who are trying to scale a business, trying to get into different ventures. I want to hear from you because I know you've worked hard on the business on Rickey's Jerky. That's important to share with the listeners.
You. So I think the term 100-year is great because, as the proverb says, a wise man leaves an inheritance to his grandchildren, not his kids, like most people think. So I think when we're talking 100-year term or 100-year policy, I think in those terms. But the good news is it's not really 100 years, because a 50-year-old guy today can still retire very well off of it in 20 years. So if a person is self-employed and they can hang on a bit, even if they're starting today at 50 and they can hang for 20 years investing, it's not a lot and it is there for you. However, we don't plan to just live to be 70 years. We plan to maybe stop doing the labor side of our business, but not doing the mind and the mental activities of our business. We'll still be able to make deals when our 70s and potentially 80s, if that's what floats our boat. So it's going to be there for us and it's going to be great.
So for me, I love that analogy you made. It's not for your kids, it's for your grandkids. And one of the founders, Rick Sapio, when he came up with the 100-year, he really said it was like cathedral thinking, because when you build a cathedral, it really takes hundreds of years to build. Sure. And I think, Mina, what you said, I just wrote it down here. It's lifestyle by design. I think that is the other big thing that you take away with the 100-year real estate investor. It's you're designing your life. It's not just happening to you. You're not just going to the next event. You're not just getting the 10 grand and putting in the bank. You're not just have one product. Really talks about the fulfillment of the business. What's the business going to do for you? Where's the value creation that's going to happen within the business? I think it's also personal financial engineering. I introduced the show as what we do is personally financial engineer, and whole life is just one of those little components to it. Now, you guys have a land business. You're going to invest in multifamily. You guys have your business. So you're engineering your whole entire, I guess, life. And I think it's important. We're all built differently. And I think we all need to have stupidity insurance to help us when we get a little stupid and when we see an opportunity to be able to tackle that and utilize that.
Speaking of that, I tell you, I've been hearing about how can we multiply ourselves by training people to do, and so you can oversee it. I've been hearing that from you guys for a couple of years, but it wasn't until last month that something clicked and he hit me, and I'm like, oh my goodness, I can do that. But it just takes time. It takes, I don't know, it just, yeah, like you said, some of us are a little bit slower, some of us are a little bit faster. Some of the guys, just have that engineering mind. Some of us have more of a design mind, but it doesn't matter, because whatever the journey is, you are allowing yourself to make mistakes and to be able to get back up from those mistakes if they are detrimental. Hopefully they won't happen, but if they happen, it's just so nice to have that backup plan.
And I would love for the both of you to speak about 5 years ago, you probably spent $2 on your education and on your mentorship. And in the last several years, you've spent multiple, I'd say at least six figures. And people always look at it as an investment in themselves. It's an expense. Like whole life. I don't really need it. But then when you get it, and when you jump into it, it's like, I never thought of that. I joined a multifamily program and it's helping me with my business. And all of a sudden I've met all these people and I started a podcast, and I'm talking about Mina and Ryan, of course. I'm just sharing a little bit of their story, but talk about that to the listeners. Somebody may be on the fence of saying, do I really need mentorship? Do I really need to join a community? Wow. What have you guys out of the whole entire experience with not just Jake and Gino? You're going to other events. You're seeing other opportunities. Talk to the listeners and let them know that it's such an important component to your personal growth.
The first thing I would say, that I believe it was MM4, your keynote speaker, Luke Wren, quoted Tony Robbins. He said, proximity is power. That floored me. From then on, I was thinking, how can I get more of this? And what do I need to do? How can I get more education from the community that we were in? And that's what we did. We just dove in. We were already in, but then we really dove in and embodied what we were getting from the community. So yes, education. I don't want to say it this way, but I would say maybe we found success from our stubbornness or dumb luck or hard work. Sure, we got to a point, and they call it in business hitting the ceiling. I really thought my jerky business was capped out. I didn't know what I didn't know. I didn't know what else we could do. I really thought, man, that's just it. Okay, let's get some multifamily, let's get some land, let's see what we can do. But because we were in all these education experiences, first and foremost, the Jake and Gino community by far. I will say that. I realize we're in the network here, but by far start with that, get plugged in and take advantage of all the intangibles that come with it. Cause it's not just multifamily. That's obviously the main thing, but everything else from the counseling to the group meetings, the money mixers to all the family stuff. It's just an incredible, what you guys built. I mean, hats off to you guys for what you built. That I'm proud to be a part of. So plug all that into, and what happens? Well, we have huge new goals with our jerky business. We see things now that we know are going to happen. We already know what's going to happen. We just have to tweak a few dials and settings, and it's going to happen. There's nothing that's going to stop us unless, the end of the world happens. Assuming everything's just going along like it is, we're going to do it.
I love that. And Mina, what about you?
I want to point on Ryan's about being among great people. Sometimes we get together just to have a beer or just to get together to network per se. And you didn't really talk specifically about a property or about a deal, but just being with people that are looking to improve themselves, they know there is something better. They know there is something more out there for them. They know they can push themselves a little bit harder. They know they can improve their health, their relationships, their lives. And they are out there just sharing, funny stories, silly stories, sad stories. It doesn't matter. It's just being it's like when you're cooking, I don't know, anything with garlic, right? You're just cooking the garlic and the flavor goes around. It doesn't matter if you're not cooking it, you are among it. So it just spreads to you and you are enjoying it as much as the person that is preparing the food. Same thing.
I love that. I'm trying to think of a way to wrap up the show. For me, Ryan, I'm glad you said that. Proximity is power, number one. I think that's truly important. I mean, the people you surround yourself with, and as you get farther and farther down the journey, you're going to meet more and more people who are more successful than you, and you're going to gravitate towards them.
There is no way we could be where we are. And we're just at the beginning. We know that. So it's been a couple of years. And we're just at the beginning of it. When you think 100 years, a couple of years is nothing. We are excited, and there is no way we could be here without being just immersed in the community that we decided to be part of.
Thank you. Lifestyle by design, Mina. I got a couple of things from you. I think that's important. Fulfillment, personal financial engineering. I think the tax avoidance versus the tax evasion. I think that's a really important one. I think everyone go out there. There's no such thing as a loophole in the tax law. It's in the tax law. It's just that people who are using it are not calling it a loophole. The people who don't want to use it or can't, they're the ones calling it a loophole. Just go out there and read the tax code. And what I love about your story is you started out, you had a small business, you got together, and then you said there's got to be more. I hit a wall. And everyone, this is during COVID when their main business is going out and doing events. That gets shut down. They have to pivot. And instead of two people who just, I'm going to give up, we haven't even said this in the show, and I should have stated this. They've worked tremendously. They put a lot of hours. They come to all of the events. They're constantly trying to grow. So it's not something that, I'm just going to, do it a couple hours a week. It became part of them. And I think the more you put into life, the more you get out of life. And becoming clear with your goals is really important. But when the business gets shut down, they didn't go and run away. They continued to invest in themselves, surround themselves with other people, continue to push. The economy opened up again. Let's go back into the jerky business. Let's do that. But let's continue with multifamily. I see an opportunity in land. And then all of a sudden, let me go out and let me protect some of my money. A smart person, learns from their mistakes. All three of us are very smart right here. We are trying to achieve wisdom for people. Wise people learn from others. Learn from Mina and Ryan and Gino's mistakes, because you think you guys lost a lot of money. I've lost a lot more than you guys have. It's just one of those things where you learn. I'm just a smart person. I'm not a wise person. I'm just trying to, confer wisdom upon people listening to this show. Don't risk every dollar you have out there. Have the stupidity insurance along with your other assets. Mina and Ryan, where can the listeners get a hold of you, where they can find out more about you and the businesses that you're involved in?
You guys can follow me at the code REI. We have a YouTube video. We have a podcast, and the website is coming up. Decode REI, like decoding real estate investment with Mina and Lydia.
That's awesome. And the jerky business?
You know, we have a website, Rickey's Jerky, and Rickey's spelled RICKEY, Jerky, JERKY. And we can be reached there. My personal email is Ryan@Rickey's Jerky. And we are looking for distributors or people that need to raise money for a fundraiser. And there are tabs on the website that you can find there to inquire more information, or you can just reach out to us. We'll talk to you. Thank you.
And what I would say is I want to put them on the spot, but I know if you have any questions as you're listening to this, if you have questions about the 100-year, about whole life, about their experience, because we can go on the show, what really pushed them over the line and made them, think and have that paradigm shift, just reach out to Ryan, hit him up on his email and say, hey, how was your experience with the 100-year? Or what do you think? I've got this situation. Would this fit for me? Having that honest conversation with other people who have done it, because we always like to say success leaves clues. I mean, you make mistakes, but you have successes. And we're always trying to emulate people who have done successful things and said, oh, I've taken this. How do I do it in my life as well? I want to say,
if it's okay, one last thing to people that we get hit up all the time for these multifamily deals that are great, where the minimum investment's $100,000. But some folks maybe don't have that. They might have half of it, and maybe they're waiting for a $50,000 investment. Well, with a whole life policy, you could put whatever the percentage is, $2,000, $3,000 a month into a whole life policy and build up to that first $100,000 investment and take that out in a few years while you still have the policy.
I love that.
So if you're just not ready to throw a whole, you're only 100,000, that's okay. Think about a whole life. I strongly encourage you, especially if you're like a youngster in your 30s or something.
So what Ryan's trying to tell you is the best time to buy whole life was 20 years ago. The next best time is to buy it today. That's like everything else in life. You buy right and you sit tight. Don't wait anymore. And the thing is, as you're younger or you're middle age and you still have some type of health, it's less expensive. So try to see how to personally financially engineer your life and see how it fits your life and your plan. I would just challenge everyone to go out to 100yearrei.com. Go take a look at the website. If you want to schedule a call with one of the advisors, just jump on there with one of our team members. And I want to thank, Mina and Ryan for taking the time to share their story. And it's been an honor to get to know you guys, to see the journey. And it really is hard work. Proximity is power. I will leave it at that. Thanks, guys, for joining me today. I appreciate it.
Thank you, Gino.